Hello viewers, in this video I'll be going over the S&P 500 ETF ticker symbol SPY. We are currently down 62 basis points, and today we have news that we have a positive job outlook and that lowered the chance of a Fed cut, so that is why we're down today. On the 1 hour chart, we do see the 1 hour RSI is near the oversold level and the MACD is turning negative. On the 4 hour chart, we do see that the 4 hour MACD is starting to diverge and point downward after a positive all-time high on Wednesday, touching overbought levels on the RSI. On the daily chart, we are going to find some support around the 9-day moving average. Reason why, I see previous resistance acting as support now, so I'll mark that as our immediate support at the moment. And for resistance, it'll be the all-time high that we left off on Wednesday afternoon, and I do believe we may touch all-time high again. So if we were to get back to Wednesday's high, that price movement is roughly around 66 basis points. And if we were to touch the 9-day moving average, that price movement is around 81 basis points. So at the moment, if we do fail to find support here, I do see the next support will be the 50-day moving average right down here. Again, with the moving average acting or moving parallel to the price movement, that does act as support. On to the next module, I'll compare today's current trend right here with this trend that dated back to 2009 to December 22nd, 2009 to March 22nd to 22nd to March 2010. And I'll point out why these two charts are similar. So what we have here in the beginning of the trend, we started off above the middle Bollinger Band right here, and we proceeded to go down lower in a downtrend for several days, and then we quickly reverse and touch the upper Bollinger Band right here. And then we have 3 points right here where it touched the upper Bollinger Band. Not quite here, but we do see on the third one right here as well. And the trend in question, we see similar patterns. We see it above the middle Bollinger Band for several days, and then it lost steam and we proceeded to go down lower in a down channel, but we quickly reversed and touched the upper Bollinger Band right here slightly, and right here as well. And then the third one towards the end right here. So we have 1, 2, 3, 4, 5 points. We also have 1, 2, 3, 4, 5 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast would also be the same. So let's head to the forecast model. I'll go to the date where we check the chart out, December 22nd, 2009 to March 22nd, 2010. So look at this chart right here. So I'll go day by day where S&P 500 went to back in 09 and 2010. So 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, 7 days out. So back then, SPY or S&P 500 was up around 34 basis points. So do expect price range or price movement to be relatively flat, not much news. And here's the price that I compared it to, the current trend right here with the 09 to 2010 trend overlapping it. And that is all. If you enjoy this content, feel free to like, subscribe, and thank you for watching.